Okay, I think that we can start. I'm a bit hidden behind the Younium logo out there, yeah, I'm here. We would like to welcome you to a Younium webinar on the topic of subscription metrics for B2B SaaS. We are really happy to have you all with us today and that you took the time to join us. And I can say that this is our flagship event. This is one of those events what we always get also a request if we can have it, but this is also an event where we gather the insights what we would like to share with you, and we are really happy to have all of you with us today, and that we have an audience what is truly worldwide audience. We have people from UK, USA, Netherlands, Belgium, and also Denmark, Sweden. So this is kind of nice for us that we know that you all see this as a valuable information for all of you, and that you think that you also see this topic, the subscription metrics and understanding the subscription metrics, as something that can help you in your day-to-day work. And here I am. Maybe also then to introduce myself. I'm Herve, and I'm the demand generation manager here at Younium. I will be your host for today. Along with me, I have Monica Torres, and she is, I will say, co-host of the chat box. So keep an eye on the chat box because we are going to share some very interesting things there. And she also manages all of these buttons and all of this behind the scenes, because as you can see, I forgot to push the button on my camera and she helped me out with that one. Thank you so much, Monica. And also maybe you can say hi to our audience for today.
Hey, everyone. Yes, really nice to have you here. And I will be, like Herve said, in the chat, making sure we don't miss on any questions or anything you might have. Thanks.
Monica sits in Sweden, and on other part of Stockholm, you have Erik Mullen. He's a subscription expert here in Younium. I know also that Erik will fly to Philadelphia in 10 days, so he's probably also a bit in mind on that part of the story, but we will tell you more about this at the end of the webinar. And we are really happy to have Erik with us today. I know that he will not like this, but he is how to say, a true maybe what will be the best word to place it there, but he's a true authority on this topic. So each time when I have problems with the ACV, CMRR, usage-based metrics, I call Erik and I say, hey, please, can you help me out with this one? So he will present today's webinar. And as I mentioned, he sits in Sweden. Also, Monica is in Sweden and I'm in Zagreb, Croatia, and we will be really happy to hear from you in the chat box. Where do you sit today and where do you listen to this webinar? Okay, when you type in, let me just go over a few housekeeping points of the webinar. The total time will be 30 minutes, and then don't worry, because yes, I go on and on to Erik and ask him, hey, about the usage-based metric, if you can tell me more about this one, and we are recording it. So you will get the recording after the webinar to repeat if you want to repeat something, or if you missed on something during the webinar. We know that it can be a bit a puzzling topic. So the recording will be in your inboxes when it's ready. We also reserve some time for Q&A part of the webinar. That will be at the end, but feel free to reach out in the chat box. Also, if I mispronounce something, you can just write that and Monica will maybe correct me during the webinar. So chat box is open for Q&A. We will have 2 polls during the webinar. And also, if you would like the presentation, we will send you the presentation once when the webinar is done. Okay, I think that's that. Erik, the floor is yours.
I was muted. Thanks, Herve, for those kind words. I hope you can hear me now. Let's get this going then. So let's talk about the agenda and outline that just for a little bit. I just wanted to mention also that this webinar is specifically focused for B2B subscription-based companies, but others are obviously also welcome to tune in and get some good insights into subscription metrics in general, which I think is still interesting for. So for the agenda today, we'll start by talking very briefly about the difference between financial reporting versus subscription metrics. How subscription metrics is different and how we can combine the two. And then we'll head over to a couple of other metrics are called CMRR and MRR, and look at the difference there. And then we talk about LTV, lifetime value, and talk about why that matters. And also net retention, why it is so important. And then we'll talk a little bit about usage metrics, EMRR and usage MRR, which will probably be interesting for companies that has a lot of usage or consumption-based revenue. And then we'll look at a customer story and have a Q&A in the end, as Hervoye mentioned. So that's the agenda, and I think we're going to have some polls also in the middle and some breathing space. So make sure to engage in that. So on to the first topic then, financial reporting versus subscription metrics. So this is just to lay the foundation before we head into some specific subscription metrics. Good to just, step back a little bit first and talk about what the difference is here. So we usually say that, and I think everyone knows that financial reporting is very important because you need to do it for compliance or regulation reasons. You have the tax authorities that needs to get a tax report, and you have, you need to have an annual, report of your fiscal year, those kind of things. Right? And this too, kind of like financial reporting, what that does is, it gives us kind of a retroactive view on how things turned out, right? So up until this point, how does our books look? What have we booked in our general ledger in terms of revenue and so forth, right? And if we compare that to subscription metrics, the idea with subscription metrics is to get more of an outlook of the future, to see, okay, maybe not retroactively in the past, but in the future, how things will maybe turn out, or what indications we can see, and basically to maybe get a better understanding of how we can plan and act proactively according to what information we have about what the future might hold, right? But I guess the idea here is that both combined financial reporting with subscription metrics is what gives you, as a subscription-based, recurring revenue-based company, a complete picture for your stakeholders and management, right? So let's then head into and look at some specific subscription metrics then. So the first thing we want to talk about is the CMRR and MRR metrics. So CMRR, contracted monthly recurring revenue, is something we call a booking metric. So something that we get from contract events, like we have a new business, a new customer, an upsell, downsell, churn, and so forth, right? And that's what affects the contracted monthly recurring revenue as a metric. And then you have its annual equivalent, which is called annual contract value. And then if we talk about the actual subscriptions, the service periods of when your customers are going to use your service, then we have the subscription metrics, and here we can look at the MRR, which is more the effective monthly recurring revenue according to when the customer will actually use your service, from looking at the service periods. And there you also have the annual equivalent of MRR, which is called annual recurring revenue. And this is kind of like what we say are the subscription metrics, the booking and subscription metrics. And after that, it comes more into the part of the financial reporting. Then the next step here is to maybe then send invoices and defer the revenue and recognize the revenue and so forth in your actual books, right? So everything that happens up here is before we actually start financially report and send the invoices and make financial transactions and so forth, right? So I'm gonna take an example here for you to so this becomes a little bit more clear and kind of dig into the details here. And I think what is very common in B2B, which I hope most of you are within, is that if you look at the past year, so the end of the year in December, I think many businesses experience that, you know, we signed up a lot of customers that wanted to get going with our service starting next year, right? So as this is a common example, I'm going to use this example in this in talking about CMRR and MRR here. So let's say we had a customer that we contracted the 7th of December. That's when we, you know, got the sign on the contract from the customer. And obviously we're celebrating, you know, balloons, serpentines, you know, this is something that, you know, we want to say that, okay, we got a customer today. We actually contract them today, 7th of December, right? But if we add some more information to this deal, let's say that they will actually start using our service 1st of January. So even though we signed them today, they're starting to use the service. That's the effective start date of, you know, using our service, right? And let's say the monthly price is 1,000 euros. So we would say then that if we bring out this table here, we would then say that, okay, contracted monthly recurring revenue will be 1,000 in December when we look at December. And at the same time in December, we also know that, you know, this customer has probably signed up for a specific term or like if evergreen that they will use our service until they stop, basically. So then we can also look at the MRR and see that that will start in January, you know, and then go on and on, you know, month after month, right? So this is a difference here, just a very simple example where we say the contracted monthly recurring revenue is 1,000 coming in December, and then the MRR monthly recurring revenue is coming in 1,000 here in January. So why is it important then to have both of these? Some of you might ask. So let's zoom out a little bit and look here at our whole subscription stack. So now we had one specific example. Now we look kind of like at our whole subscription stack, our total CMRR and MRR. So if we, in this specific case here, look at June, for example, 2021. In June 2021, we had 138,000 euros in CMRR, and we had 119,000 MRR. And here is where you might ask yourself, okay, why is this? Why is there a 18,000 euros gap between the CMRR and MRR in June? So the reasons behind this is exactly what happened in our example, that there was a delay in the effective start date. The customer didn't start using our service the exact day they signed up for the service, right? So, and this is what's common in B2B, that these things happen, right? Another scenario is that you have a ramp-up deal, which is a bit more complex, right? That maybe the customer is paying half, you know, they get a 50% discount for the first 3 months, and then the rest of the first year they have a 25% discount, and then after that they pay the full price. And that's going to delay, you know, that's going to make the MRR much lower in the first year, the first 3 months, and then the rest of the year until it goes into its full, you know, full price after the first year, right? So that's one example. And there could also be another variant of a ramp-up deal where, you know, we maybe give them a couple of free of charge months because the implementation might be extensive, or, you know, they need to get up and running. So we're saying, okay, you get 2 months for free, and then you start paying after that. So that would actually, you know, that's kind of like a hybrid between the delay in effective start and ramp-up deals that, you know, kind of push the start date, right? So that's a couple of reasons. And, you know, why do we then use the CMRR or MRR? Why are both important? So because of this very analysis, right, that we can get these gaps in them, and we want to understand why we have gaps. It's really important to understand, you know, how delayed our effective start date with our customers, which will affect our revenue, right? And, you know, do we have any ramp-up deals? Are they going to pay the full amount in the beginning, or, you know, are they going to pay farther in the future, right, and so forth? And that's what I'm trying to say here, that the CMRR is kind of optimistic, right? Saying that we're contracted them 1,000 per month, right? And that's what they're gonna pay, but they might not pay that now. So it's a very optimistic view of the future to see, okay, where is the company heading, in what direction? We can see kind of where we will end up if we get beyond all these delays and effective starts, these ramp-up deals, these free of charge months and so forth, right? Whereas MRR is maybe more close to, you know, operational, where it can be good help of you know, seeing the exact specific month by month how much revenue, you know, we will probably put in our books, and would be a good way of, like, you know, making this here and now decisions about, you know, investments we want to make and so forth. And also very good to combine with a cash flow, right? So even if the MRR is saying, okay, this is how much we'll have per month, maybe we have an invoicing, we're invoicing our customers a year up front. So we would send an invoice of 12,000 right away and get the cash in our bank account, 12,000, even if the revenue is divided up. So that's the a little bit into CMRR and MRR, and also you can think about the same things if you measure more on an annual basis. The ACV is the annual equivalent of CMRR, and ARR is the annual equivalent of MRR. Okay, I think we have a poll here, right?
Yeah, we have a poll, and it's really interesting to see like those gap reasons and how complex the B2B scenarios can be in this matter, and how like is important to track them. So let's go also into the Q&A part, as Eric mentioned, and here we would like to ask you, so are you currently using CMRR or ACV as your metrics? So feel free to put your answer, and Eric will comment on that one. And also, Monica shared in the chat box a really good article from Eric on the topic of subscription metrics, recurring revenue in B2B. Really interesting one, and just bookmark that one for later, and then you can check it up after the webinar. Okay, let's give a few more seconds. Let's launch the poll. So, are you currently using CMRR or ACV as your metrics? And we have, of course, on 61%, and no, but might look into it after this webinar. Eric, could you give us maybe more a bit or reflect on these results? Give us a bit of a comment.
Yeah, I mean, it's good that a lot of people are doing that, but you know, the ones that aren't doing that, I think, you know, I don't know the reasons why, but you know, it's always good to think about what kind of business are we? Like, are we very much into B2B? You know, like, is it a little tendencies in our subscription stack that these kind of things happen that makes it relevant to measure these booking metrics also? So then I think it's very relevant, but maybe not if you're selling streamline subscriptions to consumers like Spotify or Netflix, where when you sign up, you know, that's when it starts and everyone pays the same and so forth. I think we have a separate webinar on these kind of things that you can look at on demand. Yeah, so that's my reflection. Should we continue?
Yeah, let's deep dive into the next part of the webinar.
All right, so next up, I was thinking we should look into lifetime value. So we are going to use the same example that we had here before. So we contracted a customer 7th of December, and then they started also using our service 1st of January, and the monthly price is 1,000. I'm going to add a couple of more variables here. So we're also going to say that we contracted them for a year. So that's very common also in B2B, that we contract our customers for a specific term. And then we also say that, okay, we're invoicing you quarterly upfront. So we're sending you an invoice, one invoice per quarter. So if we look here we have another table. You see that we have the MRR committed here, and I will talk more about the other ones here later on. But what's interesting here is that, let's say we start by sending our first invoice for 3,000 euros, right? Maybe we send it right away in December. at this very time in December, our financial system where we, send the invoice for is probably going to say, okay, we have 3,000 in revenue from this customer. But, like if we think about this contract that we signed with the customer, if we go only according to what we've been invoicing and deferred in revenue in our financial system, it's going to say 3,000, but we might want to see this as, okay, they contracted, our service for 12 months. So 1,000 times 12, that's 12,000. And that's a difference between the 3,000 that our financial system is saying. So we actually want to first see, okay, the ACV, right? That's kind of a metric we talked about before. The ACV of this contract is then 12,000, while the CMRR is 1,000. And that's kind of the first step in this, but ACV is not lifetime value, right? So here is when this becomes interesting with the other column here, right? So we have MRR committed, which is, the months that we have actually contracted this MRR with the customer. So we have 1,000 in January, and then it goes on until December, right? Which will be the last month. But then we might also want to see, okay, but we don't think our customer will, stop using our service after those 12 months, right? They'll probably continue after that. I mean, we think highly of our service, and we think that they will be happy and use it for years and years to come, right? So then we might want to look at MRR renewal also and kind of assume that they will continue using our service. So then you see, okay, this is the ACV after the first year, right? But what happens, throughout time until, they will probably stop using our service, right? So that's when we come into the lifetime value, and that's why it's so important to look beyond that, right? So let's go over some very complex formulas to kind of figure out and, crunch the numbers here on LTV. Just kidding, we're not going to do that. I'm not going to throw formulas in your face. Let's just explain what LTV is first. So it is basically an estimate of the average revenue that your customer will generate throughout their lifespan as a customer. So this worth of a customer can help you determine many economic decisions for a company, including marketing budgets, resources, profitability, forecasting, and so forth, right? And LTV is a monetary value, right? So calculating kind of like, okay, what is the total value of this customer that we think it will be according to how long we think they will use our service, right? So let's say the LTV for our business is 120,000 euros. That's about how much our customers are worth throughout their lifetime as a customer with us. And this you can also use to calculate how long they will stay with our service, right? But you need the average revenue per customer to do that. So let's, for the sake of simplicity, say that for our business, our average revenue per customer is 1,000 euros per month. And that means the average customer lifetime is 10 years. And these two are actually the two metrics you use to calculate the LTV. So you would still need these to get your LTV. So if we then introduce our little table here as well, what if we combine the two MRR committed and MRR renewal into one column here and look at this, that, okay, let's actually say our customer will then stay with us for 10 years. And then we look at this over all of these 10 years and look at, the total of all those months, which will be 120,000. It's no coincidence that this specific example is the same amount as our average LTV of our whole subscription stack, because I did specifically put the average revenue per customer to 1,000, which is the same amount that this specific example is. So if we look at the LTV here then, which is 120,000 for this specific example and this customer, that's a completely different story than what we see in the financial system, right? Comparing the 3,000 that we have invoiced in December, which our financial system saying, to the 120,000, which is the lifetime value, that's a bit of a difference and might, affect, how you look at things and how you, report on things and so forth, right? Obviously, you should look at both, but, this might be super important also, and it's completely different to this one. All right, so that was LTV. We're gonna look at one more metric before we take another breather and answer a poll. So bear with me here. So next I was thinking, let's talk a little bit about net retention also. And we're gonna use the same example as we have up until this point. You might get tired of this example, but we really want to dig deep into the details here and really understand these metrics, so that's why we do that. So up until this point, we've looked at subscriptions that we signed at the beginning of the life cycle of them. Like we have a new customer, but nothing else has happened, right? But what is also very common in B2B subscription-based businesses is that subscriptions have a tendency to change throughout their life cycles, right? So that's why we want to look at net retention, which is a metric that is important according to changes that happen to subscriptions. So I'm gonna give a couple of examples, but we'll start here with another table, seeing that our MRR here is 1,000 in January, remember? And then we include a net retention column here, saying that we have retained 100% of the value of this subscription in January, because 1,000 is 100% of 1,000. That's the initial value of the subscription. Let's say something happens along the way. We're in February and we're contracting an upsell of this customer for 500 euros per month. So they're happy with the service. They're saying, oh, we want to use it more. So then you see here that in February, we will have our MRR at 1,500. And 1,500 is 150% of 1,000, right? So we've retained 150% of this subscription, right? And that's great. We retained more than the initial value. And let's see another example. Let's say we have a downsell. So the customer is saying in March that, okay, take it easy a little bit. We didn't want to use your service that much. We still think it's good, but just take it down a notch. So we're also saying now that, okay, minus 250 euros is the downsell price per month, right? So then we get down to 1,250, and that's 125% of our subscriptions, of the subscription initial value. So let's say we also come to April and the customer says, okay, we didn't like your service, or they folded, or let's use some other excuse, and they churned, and then obviously they won't pay anymore. So the MRR will be 0, and we retain 0% of our initial value of the contract, right? So let's think a little bit about this. I'm assuming a lot of you have used or at least seen net retention rate as a metric, which is quite popular. So let's zoom out a little bit and look at our whole subscription stack. So if we have a net retention below 100%, that means that our current subscription stack is contracting, right? So our customers are becoming smaller in terms of the value they're paying to us for the services. And that means we're stagnating unless our sales team aren't bringing in any more new customers that are compensating for this loss we have in our subscription stack, in our customer stack, right? So we're kind of dependent on the sales team to bring in new customers to at least stay afloat, or also to grow further, right? But if we would have more than 100% in net retention, well, that means, say we have 125% as an example, that means that we're growing our current customer base. We don't really need to rely on our sales team to bring in new customers to keep the boat floating, right? what they're bringing in, that's just a bonus. That's great. Even more customers that can, be happy and grow with us and, pay more as they use our service more and get value out of it, right? So net retention, obviously a very important metric to kind of more understand how our customers are doing. And, there's a lot of reasons to look at net retention. It could give you indications, not only about, how we're growing and, how much we rely on new business, but also how happy the customer are. Maybe we could get some indication of that. So, I think we have another poll now, right?
I hope that net retention will not tell us also to get rid of the sales.
Yeah.
If it is green one.
Don't have too much net retention because
you don't want to get the sales angry.
Right, exactly. No.
Let us dig into the second pool of today's webinar. And this time we ask you, how many hours per month does your team spend on subscription related reporting? So then we have below 2 hours, 2 to 4 hours, 4 to 10 hours, or more than 10 hours. So let us give a few more seconds for this one.
There's a dot there in 4 to 10, but it's supposed to be 4-10, right?
Yes. 4 to 10 minutes. 4 minutes and 10 seconds. No, it's 4 to 10. Few more seconds. We have a couple of people joining during the webinar, so we will send the recording once when it's ready, just to mention that. Also, Q&A will be at the end of the webinar. Feel free to drop in your questions even now if you want, or if you have some thoughts, feel free to share them in the chat box. We see already some questions there, and thank you so much for that. And also hello to everyone in Netherlands. We see that we have also people from Netherlands, so that's always nice. Okay, let us share the results. We have several people more than 10 hours. That's kind of a lot there. We have also people below 2 hours. That's always good. Maybe Eric, can you reflect on these results and tell us a bit more about it?
Very varied. So hard to reflect, but it looks like, if you spend more than 10 hours on reporting on subscription metrics, maybe you should look into that and see if you can use any tools to make it more automatic and streamlined. All right, should we continue?
Yeah.
So I'm gonna go over the last part here. So in the metrics part. So talking about the usage metrics. So again, we're gonna use our example here. I think you remember how it goes now and the details. But let's talk about the usage now also. So a lot of you might have usage-based revenue also. So meaning that it's more like a consumption that the customer is using, which we don't really know how much they will use. It will be different from month to month. It will be very volatile. So we need to kind of know, for a specific month, how much they've used something. And then afterwards, when we know, we invoice them maybe monthly, for example. So in this example, we're going to say, okay, we have also a usage fee other than the monthly price of 1,000 here, saying that €1 per email sent per month. So our service is also sending, they're sending emails from our service to their customers or whatever. Might be a bit pricey, you'd think, with €1 per email, but just for this, keeping the example easy, right? So when are we going to include usage-based revenue in our subscription metrics, in our recurring, revenue KPIs? So we want to do that when we think that, okay, this is a recurring pattern. They're always using this part of our service that is more of a usage-based, and we want to include this in our recurring revenue reporting because it actually is recurring, but maybe a bit more volatile, right? So what we want to do and what we can do in terms of a booking metric is to estimate the usage. So maybe when the customer is coming in, maybe they can say, okay, we think that we will use send 100 emails per month from your platform. or your salespeople or someone within your organization thinks that okay, they will probably use 100, right? With this, we can introduce here a metric called forecasted MRR, which is basically the estimated usage times the price, which will also be 100 here. And with this forecasted MRR, we can also, now the table comes here, so be prepared. We can also calculate the EMRR, the estimated monthly recurring revenue. So we already have the contracted monthly recurring revenue, which we, is what we know they will use according to the more flat recurring charges, right? But then we can also add the EMRR, or sorry, the FMRR to add that up to the EMRR. So then we have the CMRR and FMRR combined. So we can see that, okay, they're gonna pay this 1,000 flat, monthly price, but also 100 more per month, because that's what we think, they will pay for this service, the usage-based part, right? Let's then say also that January passes. So they started using our service for a month. January passes, they actually sent 90 emails from our platform. So then we also have the usage MRR here, saying that that's what they actually used. They used 90 times 1, which is 90, right? So that's our usage MRR. And if we combine that with our regular MRR, we will then get 1,090, right? Let's say also that February passes. So looking then into the past now in February, we still have the 90 in the usage MRR in January, because that's the truth, right? That's what they actually used. And then in February, we also have the truth here. You see here, okay, they used 110 in February. So we're gonna say the usage MRR in 110, and the total MRR is then 1,110, right? And then we can use this for forecasting the future also, right? So the thing about MRR and subscription metrics overall is that we want to see, okay, how does this develop month by month over time, right? Not just what it is today, but over time. So we also want to use this when we're in February. We also want to get an outlook on the future and say that, okay, they used 110 in February. They'll probably keep using that. We think that, so we can forecast that, right? So then it continues here month by month being 110, and the total here 1,110. Right? Okay. We're gonna wrap things up here now. Just gonna go over a customer story first. Voyado, which is one of Younium's customer, and they're a customer experience platform for retail and e-com industries. And you see, they benefited a couple of things from Younium, but I think they successfully measure both regular recurring revenue combined with usage-based fees, because they have both. And we talked a little bit about financial systems also, and that's a thing about using a subscription management system like Younium, that it's usually connected to a plug and play connector to a lot of financial systems. So they're connected to PE, it's called financial system. So before we end with some Q&A time, I just wanted to do some takeaways so you guys remember something from this webinar as well. First, we went through CMRR and MRR, getting an outlook on the future versus more operational day-to-day planning, right? And then we talked about LTV to see the complete probable value of our customer subscriptions instead of what we only see in the financial system that might be just like the first invoice or something, right? And then we talked about net retention to see the growth in our customer base according to lifecycle changes through subscriptions. And we want it to be above 100%, so sales doesn't need to fill up the churn gaps, right? And then we talked about EMRR and usage MRR, which the point being here, make sure to measure your usage-based fees as recurring revenue as well, if you think they should be considered as such. And these are two good metrics for that in that case. All right.
One more takeaway: don't get rid of your sales. So I should give this as it that you didn't hear it on this webinar. Hey, Hrvoje said that we get rid of the sales. Don't do that. Jokes on the side, thank you so much, Eric, for this insightful presentation. Inspiring as always, and it's always nice to hear how much subscription metrics solution can help you, that you really manage this full life cycle of your customer journey. So not only that you automate your invoicing, billing, as we saw, for example, in Voyado's case, that they did it for 300%, but that you can also then understand your metrics and how they can help you for the future forecasting. So I'm always interested in hearing about those. So thank you so much, Eric, on it. Before we deep dive into the Q&A part, and we have a couple of questions already in the chat, feel free to send them in. Let us just say a few things about Younium. So we are founded in 2017 in Sweden. Currently, we have offices in Malmö, Stockholm, Amsterdam, and Philadelphia. And we are niched, or let's say that we are specialized for B2B scenarios, as Eric mentioned in the beginning of the webinar. Also, this webinar is tailored for the B2B SaaS scenarios, and this is something we are dealing and what we are sure that we can bring a value in, of course, if we are a match. Also, Monica shared our LinkedIn page, so feel free to connect with us on LinkedIn. Feel free to reach out to Eric on his LinkedIn if you have any questions related to this matter, or if you have any case that you would like him to look at it, feel free. So that's also open for you. So just jump on it, and we are really happy to hear from you. Okay, Q&A part maybe.
Yeah.
One of the questions what we got during the webinar, Eric, was related to are you able to track the statistics in Excel, or is there any software that could handle those stats?
Right. Yeah. So I think, subscription management system in general, if we don't be biased to Younium, is probably a good solution to gather the data for this. And Younium, for example, also have the reporting tool also to be able to have this overview in the software. But the idea is to have control of your data and have the data structure in place, so you don't need to take an extra time to kind of create the data to do the reporting. But so I think smaller companies or mid-sized companies can use a subscription management tool for this, but obviously also when you become larger, maybe you grow out of the dashboards and widgets and so forth that a subscription management tool has, and you might want to migrate data to a BI system and include data points from other systems as well, and kind of more in detail really dig into the details of the data and so forth. But in a subscription management system, the data exists and you have everything. It's just a question of where you use it and where you produce the metrics and the graphs and so forth. And you can do it in Younium, probably in other subscription management tools as well. But larger companies, revamp and revert to BI tools later on. I think it's the trend, at least.
Mm-hmm. One more question, and that one is related to the integration. So what ERPs do you have integrations to?
Yeah, so we have integrations to, kind of a lot of different types of systems. The two main one I would say are CRM systems and financial backend, so ERP and financial systems. For example, NetSuite, Microsoft Dynamics, financial operations, and Business Central, Exact, for example. Also, there's complementary integrations for example, in the US, if you're selling to the US or domestically in the US, we have an integration to TaxShare to handle the complex sales taxes there. And then on the CRM side, we have Salesforce, HubSpot, Dynamics customer engagement. So I think CRM systems and financial backends, we have a big focus on connecting to.
Thank you. Now, one more question, and this is also somehow connected to the integrations. We use Sage on the accounting side and Salesforce on the booking side, and I need to reconcile those roles and follow the exact metrics what you mentioned, Eric. How does Younium interface and takes place in between those systems or partially replace?
Right. So Sage, we don't necessarily have a connector to, but a lot of customers, do their own connectors to systems here and there, and we also have good partners that can build integrations. But you actually don't really need an integration either, because you can run your accounts receivable in Younium, in which you will get all the booking metrics, subscription metrics, and when you do the invoicing and payment collection and revenue recognition, you get these journals from Younium that you can export to your general ledger in your ERP system for reconciliation, right? So Younium is not a financial system, but it is an accounts receivable system. So you can do that, for example. When we talk about the connectors, we have as standard plug and play connectors. The invoices are sent over to the financial system, and then you run your accounts receivable there by sending the invoice to the customer from there and getting paid, payment collection and so forth. So you can run your whole accounts receivable in Younium, and in that case, you need these journals over to your general ledger in your ERP or financial system.
Yeah, this is actually why we call Younium like a subscription hub. You centralize everything inside, and then you can send it in other systems. That's a possibility. One more, and that's directly connected to the topic, and this is kind of nice also to see. How would you recommend to deal with seasonality effects in usage MRR, especially when analyzed that it could make a big difference in a month with lots of usage is used versus a month with low usage?
Yeah, it's a great question, actually. We talked a lot about this question. So I think, a lot of companies doesn't have this, seasonality issue. But yes, a lot of companies does also have that. That is maybe they might be, affected by retail. They might be a software, SaaS company for the retail sector. And then, at Christmas or, at like those Black Friday and those kind of things, the usage can go up significantly, right? So I think there's a lot of solutions for it though, that you can take kind of like a yearly average or something like that. There are, might be too complex to try to exclude a specific month or something for the future calculation or of MRR. But I guess that could also be a solution to like, okay, we know that in the month of December, it's going to be a big spike in usage. So we don't want to forecast that for the future. I don't think any subscription management tool has a native solution for this, but I think there's definitely workarounds and plans to at least from our side to more focus on solutions for this.
Great. Thank you so much, Eric. One more thing to add on here for those who are interested in taking a look how the Younium looks with the insights and reporting. We will share, Monica will share also a walkthrough from Eric here in the chat box. So you can also open this when you have time and then deep dive more into it. And as mentioned, connect with Eric on LinkedIn. If you have any case that maybe popped up later or something that you would like to ask him, feel free to spam him. So Eric, I opened the spam for your LinkedIn now. So sorry. With this, we came also to the end of the today's webinar. Thank you all so much for joining us. Also, if you have any topic that you see as interested or you would like something to know more about or that we share some insights, feel free to send an email to Monica and maybe just write, hey, maybe this topic could be interested that you cover in the future webinars. Also, if you missed any of our webinars, check our YouTube page. Those are there. And you can also see some of our current customers here on the slide that we shared. Thank you all for joining us. Thank you for taking time. We will send the recording and also the presentation in a few days. Yeah, that's that.
Thank you.
Thank you all. Bye.